Okay, good evening, guys. So, this is the first case study we're going to be looking at on the YouTube channel. Today, we're going to be looking at EURUSD, a play from last week, play that more or less transpired last week, Wednesday. So, what we have here, based on key level theory, as we trade it, we identify what the market structure is more or less doing, what kind of signals is it giving us. From the previous week, we saw bearish price action that led into these major lows right here. These lows got breached, but we then had a massive volume that shifted internal what structures back bullish. This strong bullish indication is the first sign that tells us, okay, market is probably drifting from a bearish narrative back into a bullish narrative. We are seeing bullish volume stepping in. The next signal that gives us that we are more or less drifting to the upside. We had the last major structural point get breached as well. You can see that. The moment we get this indication that we are now bullish is when we're interested in looking for long opportunities. Right after having that breakout, we had several key levels to pay attention to. You don't drift all the way far away. You pay attention to the current market price, the current key levels that could serve as an anchor point for price to deliver. So after the break, right here from this candle, we're looking at nearest key levels you could look at here and here and here. So these are the three closest key levels to pay attention to, as price could run right into any of them, give us a decent rejection of that key level, and we will see price delivery of that area. So the first thing we're going to be looking at is pretty much how the market worked with that level. You can see the market definitely closed beneath the key level, traded beneath the key level, but eventually we got a rejection of this guy. So we're going to be using the guy lower. That's the price 1.16105. That's the key level we're going to be working with. So we can remove the other ones that are lower, because this is hindsight narrative showing you how price delivered on the previous week. So prior to what I said, you want to see the market after the breakout draw down to the nearest key level that gave an impulse. The nearest key level that gave an impulse of the 4-hourly time frame. So upon getting that indication, we can then go into our 15-minute chart. On the 15-minute chart, if you look at it cleanly, you can definitely see the way the markets traded off that area down here, broke the last structural high on the 15-minute time frame, and give us an area where we could be involved in the market. In SnR, we consider this kind of candle, or this kind of entry candle here, an eating candle, an ISL, that the market is working with this candle here. So that would have been the entry. Stops held at the lows right here for about 11 pips, and would have been able to catch a decent move on the euro dollar. I've been able to catch a decent move on the euro dollar for about 4-hour multiple, and it was a successful trade. Perfect trade held from New York Open, hit TP at Asia. We had an Asia take profit. So that's it for the case study for today on euro dollar. Please like, subscribe, and expect more analysis, more case studies, and more outlooks on this channel.